utility curve because they're not shareholders, they don't have ESOP plans linked to their performance, et cetera, et cetera, et cetera. So banks, by definition, are realizing, including institutions like Goldman who are investing in fintech companies rather than doing it themselves. They can do it easily themselves, have everything. Why are they investing in fintech companies? Because they realize that entrepreneurship is not possible in large organizations, including SoftBank. Or any large organization with 50,000 people cannot be entrepreneurial by definition. You get stuck in a lot of committees and so on and so forth. It's best to back a mid-stage company and have a partnership.
Is that backing a hedge, or are they hedging towards the potential that these companies might become their future competitors, or is it kind of we're looking at what they're doing and then we'll integrate their products in?
No, it's not an investment thing. They're not looking to make some money by investing in these companies. That's minor. I think it is to learn about what's happening. It's secondly to, as I said, it's symbiotic, to use them as a platform. Like, give you an example, a bunch of banks got together, created an information delivery system to compete with Bloomberg.
I was just going to say that.
3 months ago. Why? Because Bloomberg charges $2,000 a month. That's not feasible outside large institutions. And what is the data? The data is available from most sources. And so it is to help themselves to reduce their own costs. It is to be a catalyst for their own organization when these guys come in and they see how a lending platform develops, a brokerage platform develops. They have some reverse osmosis and catalyzes change in the organization, et cetera, et cetera.
It becomes a win-win, I think. I think on that's a great example with the chat system that they've all invested in. So if they can compete against Bloomberg and bring the Bloomberg prices down and break that monopoly that Bloomberg has purely around the chat system, it's purely around that chat system, really. Break that, and the investment return is pure upside. That's a win as well. So they can harness fintech companies, create that ecosystem of fintechs. I think we haven't even scratched the surface yet. I mean, we really haven't. I mean, you've got the Internet of Things. Everything becomes more wireless. So we track a lot of commodities, assets. I think the whole blockchain area, what Bitcoin's built on, that is going to be huge potentially. So people are looking at that from terms of a distributed ledger approach. So all of these, and I think. And I'm working with all the leading banks and brokers. Everybody's talking about digital strategy. Every single brand name I can think of is talking about a digital.
Can they afford not to, though, right? I mean,
they can't afford not to.
Clearly, does it mean that if you're talking about it, you actually have one and you can actually implement it, you actually have the talent in-house to implement it? Are they
That's their challenge now. They're all saying it now. Every single brand is saying, we need to address what a digital strategy means to us. And then how does that, back to the silos approach again, how do they actually act on that? So they need to collaborate with fintechs to achieve that digital strategy.
See, one part of it is to look at what's happening. So in our experience, for example, Barclays has an extremely active innovation ecosystem. They have a startup lab. They actually provide seed funding to startup companies. And the idea is that you get access to Barclays, but you may not exactly get adopted by Barclays as a platform. So it's a small sum of money to pay to understand what's happening out there and whether this can be internalized into the organization. In Brick Lane, Santander actually runs a Google-like outfit that does that. You show up wearing a tie, I think you're asked to take it off at the door. I'm kidding, but it's all very googly and it's all very Silicon Valley. The look and feel of it. Part of the reason is they need to find out what's going on. Also, I think today's investor environment, particularly in the West, doesn't forgive a bank that doesn't have a digital strategy. So to that, I'm being cynical, but to that extent, they need to tick this particular box. And partly, they are seeing value sort of leave the banks. So, we do remittances. Say 5, 6 years ago, when we were talking to banks in the Middle East, they would just hold their noses and say, this is not what we do, because, we're a bank, and send money, go to the bucket shop and send it. So in the last 1 year, we launched with 3 of the banks in the Middle East, and they're all the big banks. They're not small bucket shops. Emirates NBD is the largest bank in the UAE, near sovereign bank. And the logic for them is very simple, that this is something that is happening in the lives of consumers. And people are doing this. There's no way that we cannot not be part of the life of the consumer if we don't get into something that consumers want. Because if they don't get it from us, they're going to buy this service from somebody else. I think a kind of inclusive thinking is percolating through these institutions in any part of the world, whether it's in the emerging markets or in the developed markets. And we are actually surprised to see the extent to which banks are willing to even collaborate in terms of sponsoring something that is truly collaborative, that could potentially end up being competitive to them, but they say that, look, this is something that we should have our hand in for the next couple of years to see what's happening.
I mean, let me add one more thing to it. I mean, it's not, I mean, what is a bank? It's got capital and is regulated. But I see tomorrow, and we look 4, 5, 3, whatever, 5 years out, I see a Facebook, Google, or an Apple who have more capital than any of these banks, by the way, today. Apple is sitting on 150 billion of cash. Have the technology, have what the banks don't have, more customers. That's can become a bank, and they will at some point. Not to do low margin business, but to use their customer database to provide basic functions like payments, like brokerage, not get into mortgages and so on. But the bigger threat will come from the telecom companies, because if you look at most of these banks and fintech companies, the biggest cost is customer acquisition, advertising of all kinds, partnerships. If you look at, say, a Sprint, which we own in the US, or SoftBank Mobile, Sprint has 40 million customers. SoftBank Mobile has 40 million customers. 40 million people that you know everything about. You have their bank accounts, you have their home address, you know what their payment history is, where they travel. With your mobile, we know where you are right now, how much, and et cetera, et cetera, et cetera. I mean, that's valuable information. And just to add, and the telecom companies haven't woken up to it yet in the West. The day they wake up, that they have a very valuable asset in terms of customer data and stickiness, especially the postpaid guys who are there. You're billing them every month. You can lend them money because you know their credit history. You know how regular they have been with paying bills, et cetera, et cetera. These guys have a large client bases. Vodafone globally has substantial client base that they're not monetizing, and they can become a financial transaction institution.
I have a...
Yeah.
And last couple of minutes, please, for the discussion.
Okay. Well, but so it's going back to the tech firms, and for a startup right now, for fintech startup, is it more? Would you get more scared if Google launched the same product as you, or if an asset manager or a bank launched? I mean, the asset managers are kind of already doing it, but what do you think? Who's more threatening? Who could do it better?
Yeah, I think so. I mean, obviously that conversation comes up, and the thought that a Google or a Facebook gets into this market. But I guess for where we are at the moment, sort of UK is very much a focus. I mean, at the end of the day, some of these decisions are driven by different considerations. Maybe people talk about brand and trust and so on and so forth. So whether that's quite where people will want to put their money, we shall see. But there's no doubt they're capable of doing it, and they've got the budget to do it. But yeah, so that's like the kind of big scary elephant in the room, I guess. I don't think from Nutmeg's perspective, if you like, the incumbents, the sort of traditional providers are seen as a threat.
I think there's, I mean, the challenges in the wealth management industry, certainly over here is, now we've had the RDR, post-RDR in terms of the reviews, the transparency of commissions, the pension review, what are people going to be doing with that money? They can draw down on that money. Annuities aren't there anymore. So, what are people, where do they go? Where do they get their advice? Advisors now have shrunk in this market because they have to charge for a service. They can't rely on the commissions they're getting from the fund companies. All the fund companies and asset management companies are reliant on distribution models through advisors. So that's become an online platform war. And you've got traditional brands in this country that, a lot of that channel goes through. So a lot of these fund management firms, asset management firms, are building their own online shop window now to go direct to market to consumer. So it's back to the consumer. It's how, as an ecosystem of fintechs, we can be providing that best in class to the retail end user. And I'm working with all sorts of different fintechs. There's some smart ones that aggregate all the stock tips in the whole market and put it into one place. We see stock tips all over the place. We listen to the taxi driver and go, oh, that's a good idea, I'll go and put my money there. So it's how do you help the end retail customer? How do you provide real-time information? I want to know where my money is. Am I making it now? Give me an alert. Put it onto my wearable watch. I'm not sure about that yet, but anyway, we'll see what happens there. But, I want people to tell me what my money's doing. Help me. And the consumer needs that. And that's where the fintechs have got to get together. And that's what we're trying to do as an ecosystem, to provide those white label solutions. A lot to be done.
Questions? One at the back.
Everybody's getting hungry.
Yeah, well, there's one there.
Standing between them and the drink.
Thank you. Hi, my name is Gayanes. I work for Anthemis Group. It's an investment and advisory firm in digital finance or fintech. And I think I just want to tie into the last point that was made in your question, is indeed about investor protection. So we're now looking at a fintech ecosystem where regulation is slowly catching up to innovation that's actually happening. Just very recently, the Securities and Exchange Commission in the US passed a new bill on the jobs that allows unqualified investors to invest in the peer-to-peer or broker-dealer platforms. And at the same time, we've seen failure of trust, but the peer-to-peer. So my question to the panelists, and I know Chris and Williams will touch on it, is what does this mean for the investor in the future? And for those that may not have the understanding and the knowledge of this return.
Maybe just to speak to that, I mean, in simple terms, in sort of the investment side of things, obviously there are all the traditional insurances and schemes for protecting money and so forth. But from the regulator's point of view, so we're under considerable pressure to ensure that the suitability of our recommendations. I mean, I would say this, wouldn't I? Because we love the regulator because we're doing everything the regulator wants us to do. Which is to treat customers fairly. That's because our cost structure is set up to work that way. If I was trying to feed a room full of investment managers, I'd really be struggling because I'd be having to sell them product. And then I probably wouldn't be selling them suitable products. So if you want to know where the investor protection comes from, it essentially comes from competent regulation.
It's interesting to say that because I think that's part of the struggle that a lot of these brand names have online, because it's the definition of advice, and there is no definition of advice. It's whatever people perceive advice to be. So that's really difficult to plan what your online digital strategy is. So you go to the nervous end or the risk-averse end of that spectrum, which actually is perverse because the end retail customer actually isn't getting a great online service. So ETFs is a great point where some of these brand names that we know and love provide you a small universe of ETFs. People really don't have a clue what they are. And that's shocking. So I'm a big believer in education. And what we're missing here, there's a huge opportunity in the fintech space, is to help educate people about assets, what these mean. I mean, it's $1 trillion business in the US. Charles Schwab did a great job in the US of an educational exchange. We're rubbish over here, absolute rubbish in Europe. I mean, we've got more products, and there's about a few hundred billion dollars in ETFs. It's crazy. It's a great investment vehicle for the market. So, and I think also with fintech, there's a place to be. I look at my daughter, she's got that mobile in her hand all the time. How do we get the younger generation engaged in the markets as well? Back to education. So there's some great fintechs.
Correct.
There's one called Bucks.com, which is gaming meets I'm chuckling out there. Maybe I shouldn't have said it. But at least.
Talking about investor protection.
Yeah, I know. But it's more. I mean, I'm thinking of how you can help educate. Educate people about markets. Engage them in that. We don't do enough of that, and I think there's a big gap there, and that's our responsibility.
I think it's going to happen. I mean, mis-selling is a different concept. Mis-selling, I don't think you can advise because that is slippery slope. But I think education, which was a privilege of the few through Bloomberg, as I mentioned before, for example, or Reuters or whatever, is going to be gone. Because can you imagine the power of information that trader or an asset manager had because he had a Bloomberg screen? So you could see live prices and do some analytics and look at, nothing rocket science about it. It's just they could afford to have that information. I think that's what's going to change, where with your phone now, you can follow your portfolio valuation live. You can put in your portfolio and see how it's doing, or get news and get all the macroeconomic data, et cetera, which was privy to only a few people. So that's what fintech's going to change. Not advice. Advice cannot be given. I agree.
It's empowerment. Yeah. It's empowerment.
Yeah.
If I can just follow up on this question that, these comments that Rajiv was making, that people will have more information. I guess, and this goes to William, I guess people don't make the best decision when they have more information about their finances. Because
No.
So do you think that really giving more information to people is really the best way of servicing?
I would, I'd probably dissociate myself from my colleagues here. I mean, actually, it's information overload. So, I mean, the space that Nutmeg works. Yeah. So, I mean, obviously, we do have quite a number of people who invest are very competent, and they see Nutmeg as an interesting proposition because it's, low fees and so on and so forth. So we've got a very, very broad spectrum. But really, the core for me, the core target market is people who probably aren't particularly interested in what's up and down this week. We're not in the business of day trading. Our best customers are, I hasten to say, or hesitate to say, probably people like me who did a bit of that once, realized you're rubbish at it, lost a whole load of money, and that you're better off having a professional manage that money on a rational basis. If you want to gamble, go to Betfred or whatever it is. But that's not really what we're involved in terms of investment. We manage pension money, we manage ISAs on a long-term basis. And yes, I mean, the education point is massively important, but part of that is actually just actually kind of communicating meaning through all the noise, because one thing financial markets are about is noise.
Absolutely. I think
driven by him.
Well, I mean, we're trying to reduce the noise. I'm trying to work with you. No. I mean, people want better, cheaper, faster, don't they?
Well, day trading is a very small segment. Day trading is a bad example. It's like, I think they have two ramifications, okay? One, your coverage or relationship manager from a bank has to be better informed. Because, when they call you with some certain ideas or investment ideas or what have you, invest in this Fidelity fund or something, you are on top of that. So before, it was more a relationship-driven financial engagement where the so-called your financial advisor knew you for 10 years and stood by you, made you some money, lost you some money. But now they have to up the game because you're pretty well informed, and the regular person who is not financially astute is much better informed than that financial advisor is, which is always good for any product because you can look it up instantly on your iPad or your phone. If they send you an email and you get all these emails with amazing ideas, that give you extra yield or enhancement or what have you. I think it'll make them much more careful, and they'll be better prepared. an educated investor is a better investor. Day trading is a very small segment. I don't think that's what we are going. That's what's going to change. You know, the other benefit of fintech is that they also become repositories of communities, financial communities, like, you know, a little bit of what's happening with WhatsApp and so on. But a good fintech platform, there are lots of them, and, you know, will become financial communities where people share ideas, where they kind of inform each other and so on and so forth, which will also lead to education.
Absolutely, and we should be, as consumers, helping to generate the future products too. It's all part of that cycle.
It will be. I mean,
the whole sentiment, the sharing, everything else feeds back. I think, you know, one of the big disruptors to all the stock exchanges is BATS in this country. So they're one regulated entity covering 15 markets as a disruptor to the primary exchanges in every market. That's fantastic.
Well, and I guess that was consumer-led, but it's different for different clients.
But the back end of that is you get real-time.
Consumer-led, it's client-led,
but the back end of BATS is you'll get real-time data covering 15 markets for a fraction of the price. So, you know, the traditional benchmarks and all the different benchmarks that we have, FTSE, et cetera, I mean, the costs are going up. So the operational costs are going up for all these institutions. And that just gets passed on down the line. That's wrong. You know, so that has to change.
It's an interesting discussion. I mean, actually, after hearing the thoughts of the panel members, I was kind of thinking that, you know, maybe it's the, like, you know, we are saying it's the end of the road for the traditional banks which are out there. You know, they're just, their core business model is on the standard banking operation. Still have some of those banks, especially in the advanced countries. I see that countries like India will still have a lot of populations to cover with this technology. So there is a bit of leeway time over there for them to evolve. Whereas these advanced economies see that these banks, either they embrace this technology right away or just wait for their natural death in few. That's one question. Second one, I'm sorry to combine. Second one is that I do see that a lot of emphasis on the regulatory. In fact, I do so much emphasis on it. Now, considering this technology is coming, now I'm seeing that maybe our regulators need to embrace this technology and start framing the regulations according to the technology. Then banking is now becoming a commodity. They have to start thinking like that instead of trying to regulate things like there are going to be traditional banks.
You mentioned blockchain before, and I think of all